All right, everybody. Well, hey, welcome to the Monday Note. Glad to have you guys here. What an interesting Monday, right? Kind of a crazy weekend. We have obviously Peyton Manning retiring today. You got rest in peace, Nancy Reagan passing away, and then of course, all of Houston shuts down in an accident this morning with some naked lady dancing on top of a big wheeler. So, gotta love Houston. Oh, just another interesting Monday. But hey, everybody, good morning, good afternoon, good evening. Thank you guys for joining us here on the Monday Note. I know we have people listening to us in 24 different countries across the world. So definitely excited for you guys to join us on this episode of the Monday Note. So for those of you guys that are joining us for the first time, we do these calls every Monday night at 7 o'clock Central Time. A lot of good content, a lot of good education, a lot of great little products are available for you guys that will take your real estate and a note investing career to a whole different stratosphere level out there. So if you guys are joining us for the first time, you can always connect with us online at the different social media websites at LinkedIn and Facebook, Instagram, Google Plus, and Twitter. You can search by find me on there at One Scott Carson. If you like the videos and want to catch the replays of all our Monday Note calls, you can catch us on YouTube and Vimeo.com by searching for We Close Notes. So let's dive into some of the stuff. We do have some upcoming events for you guys to make note on your calendar, everybody. Our next virtual note buying for dummies workshop. A lot of people are always curious about when we have those. Well, our next one is in 2 weeks, March 18th through the 20th. That is $5.99 per person if you guys are interested. As always, first responders and past and present military are always comped into the workshop. We also have a couple cool things. I'll be speaking actually tomorrow night in Portland, Oregon, and then also this Thursday back in Houston, Texas. I'll cover a little bit more about those two as we get forward. If you'd like a little bit more of a kind of a kick in the butt, get your note business up and rock and roll, and you've been to one of the virtual workshops, then you might want to take advantage of our upcoming fast track note training taking place here in Austin, Texas, March 24th or the 26th. We've got 2 spots left available for the fast track. So really excited about that. Going to be 3 days. It's a Thursday, Friday, Saturday. You spend 3 days with roughly about 6 other note investors going through and really getting your note business kick-started. We really spend a big chunk of time on showing you how to raise capital, find assets, and then also put your business in place. Everybody's a little bit customizable, but so if you want to find more information about the fast track, once you do sign up for that, you do get a shot, do become a member of our mastermind group that's taking place April 15th and 17th here in Austin, Texas. Really excited about some of the guests that are coming in and spend a couple days with our Note Mastermind group here. So you can always find more information by contacting me directly at scott@weclosenotes.com. But I know that a lot of you guys are enjoying our Wednesday Hump Day happy hours where we're just kind of chilling, visiting with experts in the field. Last week we had Chris McClatchy, who's an amazing investor and attorney out of Merritt Island, Florida, who shared some of his zero-down strategies. Our special guest this Wednesday is actually my buddy A.C. Ramos out of Houston, Texas, and share some of the things that he's doing there with his business booming. Margie asked a question, what is the name you use to find you on YouTube? Look for We Close Notes. Look for We Close Notes on YouTube, all right? But we're doing this again every Wednesday, the Hump Day Happy Hour, just basically me and a different guest spending roughly about an hour talking about business life and what kind of makes us tick, and we've been getting a lot of positive reviews about that. So excited about that. For those of you that are interested in hearing me speak tomorrow night that are up in the northwest area of the United States, up in the Portland area, we're going to be at I'll be susking the 3 F's of note and buying, the find, fund, and flip. And we'll be at the Portland Sheraton Airport Hotel from 6 to 9 p.m. tomorrow night. And so if you want to RSVP for that, let us know. There is no cost to attend. Come network. I think we've got over close to 60 RSVPs already. Really excited about that. It'll be the first time I've been back in Portland in over a decade. Actually, 12 years since I was back there for a college football playoff game. So anyway, join us there, and we're excited about it. So also, guys, we have some cool announcements and some things. Today, we launched our owner finance note division here at WeCloseNotes.com. If you've got an owner finance note, a first lien on a residential commercial property with a month to season or more, we will look at making an offer on that for you. We are buying that stuff. We want your owner finance notes, all right? So if you've got a deal you're looking to move, get some cash out. No, I'm not being J.G. Wentworth. feel free to email me. We'll send you a link for you to enter in your deal. We'll be glad to get you a quote within 24 to 48 hours on your owner-financed first lien. We do look at residential and commercial properties. Actually, next week's phone call or next week's Monday Note will be with First National Acceptance Corporation. Daniel Mandelon talking about how to structure your owner-financed notes, get the biggest bang for your buck. We had a question pop up here. I have someone who offered me one the other night. Okay, well, great. Maybe you should reach out to them to Christina and see what we can get for that for you. Have had a lot of people who have asked us about our IRA investor plan that we have. If you guys are looking to tap in to IRA investors across the country, we do have that available. We can help you pull different lists of IRA investors in the county of your choice, whether it's local or somewhere else. It is $2 per lead for that because we come up with the name, the address, and the email address, as well as phone numbers a lot of times. So it gives you a great opportunity to tap into IRA investors in the area, send out mailers to them, send out some sort of correspondence, and have them start networking with you to raise private capital. Had a lot of success with our own business on that stuff. We haven't talked about that with others because, we just get so much, we get so swamped with private money coming in from it. So if you guys are looking for that, it's $2 per lead. Minimum order is 500 leads. So take advantage of that and email me as well for you. So, all right, any questions before we get rock and rolling into our main subject tonight? We had a huge amount of people that joined us last week on the Monday Note on the Weaponize Your Credit webinar with Merrill Chandler. We're excited about week 2 of that webinar, the part deux, D-E-A-U, what is it? Hot Shots part deux. We shall call this Weaponize Your Credit part deux. But we're really excited, guys. Yes, this is being recorded. I know there's a little snafu with recording last week, but Merrill and Cheyenne, I give Cheyenne a lot of credit. Cheyenne Hall over there at Credit Sense for providing us a link that you guys can go back and watch. We're here to help you guys really educate you. Love to see more success stories, business credit. Okay, Milton, we'll get to that later there here with Merrill on the call here for you. But literally the Monday Note, guys, we're here. If you have a topic you'd like for us to talk about, spend a little bit more time on, please let us know. We're in the process of scheduling out a few of the next coming Monday Notes between now and April and May. And so just if you've got a topic we have not covered, please let us know. We'd be glad to add that into the database of the topics that we're running with. So you're welcome, Milton. All right. So you heard him last week. Yes, I'll give you a note, Mister. Oh, yes. If you guys are looking for the replays, you can go to this website, bit.ly/the Monday Note. Yes, it's case sensitive. It's a short link to all the previous ones that we've called the last 31, 32 Monday Note webinars for you to take in. Lots of great information there. Literally, I think Chase was looking at it, and there's over 40 hours of content for you on the note business. All valuable content that you guys can use in your business. So, all right, let's get into the meat and potatoes of tonight's call. Obviously, you guys were blown away by the amount of information that you learned last week. I know I was. I know it's been a crazy week because literally Tuesday I headed out to Tampa for not for a note mastermind, but a collective genius mastermind I'm a part of, and shared some of the things that I learned last Monday night with Merrill. And so really excited about tonight's call. I know so many of you guys reached out to me and said, hey, when's he going to cover business credit? When's he going to cover some other things? And so I'm going to just bring him on. Merrill, are you there, buddy?
I certainly am. How are you guys?
Hey, good to see you, buddy. How was your week, man?
Actually, quite eventful. I just got back from an event in L.A. where we spoke at another real estate investment conference. And, again, love spreading the news that we have total power over our personal and business credit profiles and actually power over our fundability. So I'm excited to share with you this evening what's going on. I even actually have a special treat. My chief operations officer and the senior business credit advisor is actually going to do tonight's event because I wanted him to be able to speak with your group so that when they call in and if they are interested in the free credit analysis and if and be able to say that we want them to be able to say that they are creating that they're able to experience more, how would I say it, more fundable opportunities. And so when he speaks, he's going to be coaching anybody who's interested. He's the one who's going to be coaching them. So I kind of wanted it to be out of the horse's mouth. Does that make sense?
Yes, but we know he's not a horse's mouth, though. But he.
Yeah, right? Exactly. So without further ado, I'm going to turn over the presentation to Brad Burnett. He's been with me for over 8 years on this amazing journey, and I am thrilled for him to be able to share with you really the capabilities that we have when it comes to business credit and how to shape your business so that lenders look at you and say, you know what, I want to give them more money. Brad Burnett.
Hey, Brad, glad to have you, buddy.
Hey, thanks, Scott. It's good to be here. It's exciting to see all the great things that you have going on for your groups, too. I love seeing it.
Well, thanks, man. Well, I'm really lucky. We got a lot of great students out there. They're doing amazing things. They're joining us tonight, and I'm just very blessed that a lot of people take action, and that's the most important thing as an educator and investor is making sure we surround ourselves with people that literally do more than just talk. They walk the walk. So we're excited for what you got to share tonight with us.
Absolutely. Well, I appreciate it. I'm excited as well. And so what I want to do real quick, if it's all right, is just recap a little bit of some of the highlights from last week for the folks who are maybe new tonight. And it really comes down to, Scott, the fact that everything we do when it comes to business, until we start cycling through anywhere from 3 to 5 million a year, everything we do in funding is going to be backed by our personal credit.
Right.
And so a lot of times we get lost in the excitement of I want business lines, I want business lines, I want business lines, but we neglect the personal credit that's going to get us the business lines because especially since 2008, and you know this, Scott, as good as anybody, the purse strings tightened, the banks started holding on to every penny and didn't want to give anybody money. Well, they're starting to loosen up again. And so the nice thing is when you come in with a highly fundable 800-plus credit profile or even a Tier 1 credit profile like Merrill spoke about last week, it puts you in a position where all of the best rates, all of the best opportunities are at your fingertips. And so it all starts with your personal credit identity. And Merrill went in depth about this, that you have to have the right personal credit identity being basically reported to the bureaus from all of your lenders. Because if there's any confusion in your personal credit identity, it's an immediate red flag alert to the FICO algorithm. Because what it looks like is there's some sort of, shall we say, some sort of underhanded dealings that could potentially be going on. Right. And that's the last thing we want the algorithm to look at, right?
Exactly.
So it really comes down to the simple process, and this is one of the biggest things we look at when we actually do one of our free analyses for any one of your group, is we look at their personal credit identity because that's the first thing the algorithm looks at. It goes in and it says, are you who you say you are? And if there's any confusion, and you know, in Merrill's presentation you saw what the confusion looks like. He had multiple name variations, multiple addresses, and all that does is confuse the algorithm and cause uncertainty, and it makes you become what appears to be less trustworthy.
Right.
So we want to be as trustworthy as we can algorithm that is scoring all of the data that these bureaus are collecting on us. And if we can get them all dialed in precisely, then our scores are going to climb. We see big jumps in our client scores, anywhere from 40 to 50 points in the first 30 days by dialing in their identities exactly and precisely. So it's a huge, huge opportunity for points and fundability as well, because anytime you get out of manual or out of automatic underwriting and you're in manual underwriting, your opportunities decrease, and at times they decrease exponentially, and that's not what we want to have happen.
Right. No, that makes sense. So I'm looking forward. I had to fly out last Tuesday morning, so I've just went to myfico.com and downloaded a report and be emailing it over to you guys here to give you let you guys tackle my stuff as well and see if we can't boost up the scores some as well. So looking forward to that.
Absolutely, we're excited about it, and I'm pretty sure our lead analyst is going to be taking care of your file personally, so you're going to be in the best hands. We'll take good care of you. Now, another little recap I wanted to touch on. One of the things that we know about the FICO algorithm is there is a perfect credit profile that exists. And so if we could take everybody, take them back to when they were 18 years old, just old enough to start getting credit, we could create a perfect credit profile that would score 850 across the board and would be highly fundable because we could put all of the exact components we need to have for that profile. When it comes to revolving accounts, some of you are going to cringe when you hear this. Some of you, it may be something you've already heard because you spoke with one of us last week when you called in and set your analysis up. But the perfect credit profile has three revolving accounts, three revolving accounts that are all MasterCard or Visa from Tier 1 banks.
Right.
And most of us don't have that in our credit profiles. We have HELOCs that ultimately are damaging to our credit scores. We have, Macy's cards that are finance company cards that actually end up crippling us as we try to gain scoring points in our FICO scores because they're not valued in the algorithm the same as a Tier 1 Visa or MasterCard. So when you go, and Merrill uses this example, and it's tragic. I was actually buying a birthday present just the other day for one of my nephews, and I went to Target, and sure enough, as sure as I'm standing there, they said, "Would you like to get the Target card? Save 10% on your $20 purchase." I'm sure you've had that happen, right, Scott?
I was at Macy's this weekend, really fast Saturday. Same thing. Got hit 4 times. Would you like to put in your Macy's card? Would you like to put in your JCPenney card? I'm like, no, I'm good. You're gonna get 10% off. I'm like, yeah, no, that 10% off is gonna cost me huge over the next few years. I'm good. Thank you.
Right, and that's the thing. It's going to cost you tens of thousands of dollars because you can't get the loan rates or the loans that you want if you use these, and it happens every time. That card will again, it cripples you when it comes to getting score points in your algorithm, and it hurts you when an underwriter looks at it. You will never get a $20,000, $30,000, $50,000 business line of credit because you have a $500 or $750 Target card. That just will never equate. That's not a good reputation to have. If you spend $20,000 at Target at Christmas, I could see maybe the 10% savings. But if you don't, it's just not worth the money. It's way too damaging. So we want to take a look at, and I got to throw this caution in there, Scott. I almost forgot. Nobody change anything. If you have a Target card, please do not go and close it just because I said you shouldn't have a Target card. Every single thing that is in your credit profile right now is giving you exactly the score you have. And if you change any one thing, it will have a ripple effect across your credit profile, and you might end up losing 10, 20, 30, 50 points by closing out a card like a Target or a Macy's when it's not being the value isn't being compensated by a Tier 1 card. So don't change anything. If you have these cards in your profile, give us a call. Set up an analysis. We will give you exact details of what it will take to get your score where you want it to be. And as we mentioned last week, this is something that we'll do free for every one of Scott's group just because of the gracious host that he is. So don't change anything. That's my warning. It's like playing soccer in a minefield and you're wearing steel-toe boots. It's not going to end up well.
That's a good analogy, Brad. I like that.
Thank you. I actually stole that one from Merrill.
There you go.
The last thing I want to kind of recap is installment loans. And with installment loans, and especially talking to real estate investors, we know how this can get out of control real quickly. But the ideal, the perfect credit profile, it's going to have a mortgage, it's going to have an automobile, and then it's going to have 3 to 4 other installment loans. And in this case, 3 to 4 other properties, mortgages, would work to create that perfect profile, but your installment loans are where you get the depth and the breadth of your profile, so that when the algorithm starts looking at you as a profile, it can have some sustenance to really sink its teeth into. And with installment loans, one of the keys that Merrill talked about, and if you missed this, shoot us an email, shoot Scott an email, let us send you over the link to the presentation so you can catch it again live from Merrill. But one of the keys with installment loans is how they score into your FICO score, how the algorithm counts them into your FICO score. And take an automobile loan, right? We go out and we get this loan, and the first 12 months of payments, when we hit that 12th payment, we're going to get 40% of the possible FICO points for that account, for that trade line. 12 months later, at 24 months, we get an additional 30% of the points that particular trade line will give us. So in 2 years, we're at 70%. The next 30% is going to be amortized over the rest of the loan. So if it's a 5-year loan, you've got 3 more years. If it's a 7-year loan, you've got 5 more years to get that last 30 points. So one of the strategies that we teach is how to go out and refinance or even release if you're doing leases at that 24-month mark to really gain an additional boost and some real power behind your FICO score. So those are some of the highlights from last week. I'm happy again to shoot out an email with a link to anybody who would like to catch the whole presentation, because I promise there's a bunch more. Scott can attest to that. There's a ton more information.
Yeah, we'll do that, no problem with the.
So let's jump in.
Yeah, we'll do that with the replay from this one. We'll make sure it's an email out with the replay for this one and the replay or the link for the video of part 1 that Merrill had provided us as well. So excited about that. Are we on this? I just want to make sure, are we on the same screen with you on the surfboard there, Pat?
Yes, yeah, that's me on the surfboard. I don't surf, man. Sharks are too big. But yes, that is the right screen. All right, so let's jump into this. And starting where one of the questions that Merrill led off with last week is, can you win a game you don't know the rules to? And the reality is that we really can't. If we don't know the rules to the game, there's no way we can win, and so we have to get up to speed on what all the rules are. The other part is you got to know how to play well, right? If you know the rules, now the key is to play the game better than everyone else, and that is how we win the game. So when it comes to business credit, we're going to talk tonight about the big picture of business credit theory, actual business credit, and then the 5 strategies to help build your business credit in a way that is sustainable for the long term with your business. I'm going to tell you right out of the gate, and God bless our clients' hearts, a lot of times, and Scott, you may have heard of these scenarios, a lot of times we get folks who come to us and say, hey, I just found this funding source online. They promised me I can get $1 million in 45 days.
Yeah. And then if that's true, I've got waterfront property. I mean, I've got oceanfront property in Arizona too.
Yeah, absolutely. And I'm going to use my $1 million to put a down payment on it, Scott, so it'll work out great. When you find those websites, they're 9 out of 10 times absolutely fraudulent. It's just not possible in almost every scenario. Unless you have an impeccable business history with incredible financials, that's just not going to happen with any reputable lending institution. The other caution is when it comes to business credit, we have these credit card builder type companies out there who say, oh, yeah, I'll get you $100,000, I'll get you $50,000 in business credit. But what they end up doing is just pummeling your personal credit profile, inquiry after inquiry after inquiry, and get you a $5,000 credit card, a $6,000 credit card, and they try to get enough of them that it adds up to $100,000. Couple of problems with that. One, accessibility. There's there are ways to make it happen that are a little less than clear when it comes to lending procedures. And the other part about it is, besides destroying your personal credit, it puts you in a position where you're going to be paying out the nose for all these different lines of credit. And so I've seen too many scenarios where those turn out badly. So just some cautions as we jump into this. Tonight, we're not talking about anything like that. We're talking about unsecured business lines of credit from reputable lending institutions. Sustainability of business, that's our key. So as we jump into this, we're going to start talking about the big picture of business. And I want to start off just asking everybody on the call, everybody in the group, one quick question. How many of you are business owners?
Should be everybody that's on here right now.
Should be every hand in the air, right?
Yep.
So if everybody on here is a business owner, I'm curious how many of you are self-employed?
Are you going a little rich dad, poor dad on me there?
A little bit, right? And then how many of you are employed by a business? So if any of you started putting your hands down going, no, I'm a business owner, you're also employed by the business. It's the same question, just asked in a different way 3 times, right? The question, though, leads to how are you why would I fund you? Why would I give you my money as a business line of credit? What makes me want to, like why do I want to give you my money? And it's, what's your source of income? As we look at this, and this, we just plucked this off the internet. There's nothing special about the Chase Sapphire Preferred. Feel free to look at it if you'd like, but we really did just grab this one and pull it down. The big question is, when you look right here, employed, unemployed, self-employed, what's the most attractive to a lender?
Probably the employed part. Would that be correct?
Absolutely correct. Employed, yeah. It's highly fundable when you are employed. If you're self-employed, we all like that because it feels good. We're independent. We're doing our own thing. We're making big moves. But when a bank looks at you and you say you're self-employed, they don't see safe and reliable. It creates uncertainty. How many small businesses, how many self-employed individuals go out of business and are not creating or having any sort of sustainable income? It happens far too often, far too frequently, and it costs banks a lot of money. So they want safe and reliable. So a safe borrower, you're employed, you're a professional. That's safe and reliable. So when you're employed by your company that you own, that you establish, now you start to have a reputation or in your W-2 job, if you still have one of those, you're a safe and reliable bet when it comes to me lending you money. I have a very low chance of losing my money because you have a lower chance of losing your income. And that's what we got to remember as we go into this process. Banks, it's not a real difficult approach here. Banks want to lend you money. It's not adversarial. They make money when they lend you money. And so we just have to know what they're looking for. And the biggest thing lenders are looking for in a borrower is what creates conditions of trust. That's what they're looking for. So the first thing we do, we walk in with a highly fundable 800 plus tier 1 credit profile, and we're already more trustworthy because we have a higher credit score. So out of the gate, we have additional credibility just because we've taken the time to create that excellent credit profile. The other key, when an underwriter looks at your file, they're going to see, how do you view money? How do you treat money? And Scott, this is one of the times when I want everybody on the call to reach in your wallet and pull out a credit card. Now, not a debit card, because debit cards are just cash. It's got to be a credit card. And when you look at that credit card, whose name is on it? If I was in the room with all of you, many of you would say your name. In my case, I would say, oh, yeah, it says Brad Burnett. That's that's my credit card. Well, it's really not our credit card, but a lot of us have this belief that we've earned it, right? We did what it takes to have good credit, and we earned this credit card, and they gave us this credit card, so it's our money. I promise you there's not a bank in the country or even on the planet that thinks the money attached to that credit card is your money. It's their money.
Yeah.
And you want to know how you treat their money. So treat their money with deference and respect, meaning we coach our clients to let banks know I don't need any more money right this minute. We coach our clients that based on what their debt-to-income ratios are, there's a specific cap of where they would want to have any revolving accounts, and we let them know to tell the banks, hey, don't raise my limits just automatically anymore. Check with me first. I want to make sure that I'm not damaging my profile. If you want to really take advantage of something like this, when you're at a bank and you've got a business line of credit, one of the things that can happen is if we go out, and especially in a scenario where we're working with investments, right? How often have you had a deal come up that if you just had a quick $50,000, you could make a deal happen, and in a few weeks to a month, you could turn that 50 into 60, 70, 80, 90,000, 100,000. You could double it even.
Mm-hmm.
I'm sure that opportunity presents itself more often than not, right, Scott?
Oh, it totally does. Yeah, totally does, Brad. Yeah.
And so imagine instead of just blasting that check out there for $50K and taking out, now granted, I get it. I'm an investor as well, so I definitely like the opportunity when it arises. I take action. I take advantage of that opportunity. But imagine instead of doing that and just writing a check for $50,000 and then your credit line being completely maxed out, and all of a sudden your lending institution, when they see your line is maxed out, your file goes directly into their risk department because now you have blown through their comfort ceiling and are viewed as a high-risk client. And if your file goes into their risk department, it's going to take up to 6 months to get it out. 6 months of great behavior and habits to get your file out of the risk department because they don't like to see usage go beyond 50% ever. Now, we get that there are times it has to happen, but imagine if you just did this. Imagine if you just called your bank and said, hey, I have an incredible opportunity right in front of me. It's going to take my entire line of credit, but I'll have that thing paid back within 45 days, 60 days. I just wanted to let you know ahead of time. First of all, as soon as the banker gets up off the floor from being knocked out by the fact that you're actually talking to him about this, he's going to give you his blessing. And then when your file hits that risk department, it's going to have notes all over it saying, hey, these guys called. I said go for it. They're in great status with us. These are fantastic clients, and you'll be out of the risk department in no time.
Now, Brad,
so
let me
can
I ask you a question about that real fast, buddy? I don't mean to interrupt you.
Absolutely.
Do you see that more happening with your local banks, your local lines versus something like a Chase or Wells Fargo where really the local banker really doesn't have the capacity to pass it on, where it's more of a numbers game at Chase and things like that?
Do we see it going into the risk department more at the local bank level?
Well, I used to be a banker at Chase, and if somebody came in and had a line of credit with me and told me they're going to use it, great. But with a lot of those bigger institutions, it's all about algorithm in the computers. It does, they weren't going to call me to say, hey, do you know Mr. Smith? That he's got a line of credit now is at 50,000. It's close. It's 95% versus being used. What I'm trying to say is that relationship more so with the relationship banking like the smaller local banks, or do you see it all across the board more so?
You know what? Recently we see it more across the board,
okay.
and usually though it's the smaller bank. The scenario I just described is more facilitated to the smaller banks, okay, because you can have that relationship. What we found with our contacts at Wells Fargo and other banks is at the big nationwide banks that the local banker has no idea.
Yeah.
It's never something that comes back and is like you said, nobody's going to call and say, hey, by the way, your client that you gave this loan to just went into the risk department. It's never each hand, like one hand doesn't know what the other hand's doing is really what it comes down to at the bigger banks more often.
Right. Okay. Cool.
Yeah. So to that point, though, a quick phone call saves you a ton of headache, and it will work in reverse. If you're banking at a big bank, giving your local banker a call, they can still put that notation in your file to help save a lot of the headache of trying to rebuild your good reputation and history over the next several months. So treating their money, the other component to this, Scott, too, is another way to really treat their money with respect is to not go above 50% on the utilization is as often as possible. I mean, you want to stay below that as much as possible. And once we have, we'll grow our client business lines to whatever level their goal is, whatever they need to do to facilitate their businesses. And once we reach their goals, if they're not going to be going for more money, then all bets are off. They can blow every limit up to the top, go crazy, make as much money as they want, and then just know that if they need to go for more money, they're going to have at least 6 months of really good history below that 50% mark so that it creates a look-back period for an underwriter that they can say, okay, this looks like they had a bit of a time here, but obviously it all got paid back, so it wasn't too much of a risk, and now they're back down in this 50% level, so they're operating on a more safe and less risky level, if that makes sense.
Totally does, man. Totally does.
All right. Now, the last piece of this, the ideal borrower. You really have to have a plan, and it has to make sense. One of Merrill's favorite cartoons is a cartoon of some scientists in front of a chalkboard. Some of you may have seen this. It's all over social media, and they're looking at this, and they say, okay, so we've got all the X's and the Y's and the Z's and all of that stuff, and then right in the middle here, a miracle happens, and then they solve the equation, right? Well, too often we walk into banks as business owners and have this plan, and so I've got a great deal, got a great idea. It sounds fantastic. I'm going to make a lot of money on it. Just a little piece here or there that maybe I'm missing. If your plan involves a miracle in any way, it's not a sellable plan for a lender. They need to have a clear plan of exactly how they are going to get their money back. That's all they care about. They just want their money back. And so I know with Scott, he gives you guys so much education that dials your plan in so precisely. All you got to do is follow the steps, follow what he teaches you, and you'll eliminate the need for miracles, if that makes sense.
They have called me the miracle worker before, but not all the time.
Well, and I can see why. So as we dive into this, think back everything we just said and think about what are your belief systems about borrowed money. Do you think it's your money? Do you come from the school of money is the root of all evil? Or do you come from the school that money doesn't grow on trees? Or you come from the school that if you plant the right seeds, money does grow on trees? A lot of times, these belief systems, they're not ours. But where your head is, your wallet will follow. And so it's important to get a handle on what your belief systems are about borrowing money. There are plenty of folks out there who say, live life debt-free, cash only. It's a thought process. I don't subscribe to it. I get how many people might, but in this day and age, having a fantastic and excellent credit reputation will provide you so many more opportunities than what you can encounter just on a cash-by-cash basis, and unless you're coming into this with a gigantic trust fund. If that's not you, we need to talk about credit. And so let's talk about business credit a little bit more. What business credit is not, right? It is not anything that reports onto your personal credit. If it reports on your personal credit, it is not business credit. Capital One, their business card reports directly on your personal, and they'll argue with you, no, it's a business account, but it's reporting on your personal. It's not a true business account. We've got to be careful of this because what ends up happening, or what will end up happening, is you'll have a scenario like we had a client just recently who went out and was going for a business line of credit. We given him some counsel on the limit that he should go for. His loan officer told him he could go for more. And the interesting thing is, the underwriter came back and denied him. Said you have too much available credit on your personal. Some of his personal credit that was reflecting as available was business, air quotes, business credit cards. And so we have to be really careful, because business credit cards will blow us right out of the water, and they cause a lot of confusion in your personal credit profile and a lot of headaches. And if you have anything that goes sideways with them, they will just kill your personal credit profile. So if it reports personal, it's not a true business card. And this is what it can look like, right? Revolving accounts that get blown completely out of proportion because we have all these business lines reporting on them. So what is business credit? Business credit is many things, right? Non-traditional, we've got our hard money, our private, our crowdfunding, vendor trade lines with net terms, 30, 60, 90 days, business trade credit cards, they're non-cash cards, they're like store cards, business credit cards with cash advance limits, those types of things, business lines of credits, business loans, SBA, and commercial loans. The cheapest money possible is the last three. And that's the real succinct target that we want to focus on. The one challenge we face, and Scott knows this, business loans that are SBA backed, they do not lend to investors, real estate investors. It's right in their facts, their frequently asked questions. It's in their applications. It's everywhere. If it's an SBA, they will be very specific on what they'll loan when it comes to real estate. Investing is not one of them.
Yeah.
So business lines of credit typically becomes the sweet spot for investors, because we can get business lines of credit and we can grow those to whatever level you need to grow them to. Okay? So when it comes to business credit instruments, who is responsible for payment? Well, if it's a PG or personally guaranteed loan, it's full recourse. That means everybody who has their signature on that application is going to be personally responsible for paying back this debt regardless of what happens. And so if the world falls apart, if the zombies show up, you still have to pay this loan back. And they'll be knocking on your door saying they want their money until they get paid back. If it's a non-personal guarantee or a non-recourse, that means the business entity is fully responsible for repayment, so there's no crossover onto your personal liability or responsibility to pay it back. Mm-hmm. This is where we want to be. This is where we want to get to, so that we have the business completely operating on an independent level from anything on the personal side and from your personal finances as a repayment method. How do we get there? Well, it's very simple. Like Merrill talked about a little bit last week, and this is the best way to put this, really, Scott, is it's easy to marry down. It's hard to marry up. So if we're trying to marry outside of our range, it's a lot more difficult, right? So what does that mean when it comes to the banks? In our personal credit profile, we want to have Wells Fargo. We want to have Chase, U.S. Bank, Citibank, Bank of America. We want to have that Tier 1 reputation, so that when we go out and go for our business lines of credit, community banks are still the highest volume lenders when it comes to the number of business lines of credit in our country. And so if we can go in with a national bank reputation, community banks are going to be far more likely to lend us their $20,000, $30,000, $50,000 business lines of credit, because they know we can handle it. They know we've done it before with Wells Fargo and Chase. Does that make sense?
Totally makes sense. Totally makes sense. It's like you're basically they see it, they're like, oh, please step behind the red curtain, sir. We see you've got access, you know.
Exactly. Yeah. Perfect analogy. Yep. So how do we come to this? We know how to do it on the personal side, and Merrill nailed it last week with his presentation on exactly how we build that personal credit profile to be highly fundable. But when we come to the business side, how do we know if we're fundable? Well, it's our business credit reports, right? It's Dun & Bradstreet, it's Experian, the Smart Business. Now, Dun & Bradstreet is at best kind of shoddily put together, if I can say that on a call. It's not the most precise scoring algorithm is really what it comes down to. But the good news is this. Just a little while ago, Dun & Bradstreet and FICO announced the FICO Small Business Scoring Service. They are actually taking over the scoring model for Dun & Bradstreet, and they're going to create this, what they refer to as the blend of data that FICO can bring to the Dun & Bradstreet model. So in this case, we're going to have the most reputable scoring system in the United States, for sure, taking over what has been the gold standard of business scoring and bringing their algorithmic abilities to Dun & Bradstreet. The big thing for this, Scott, and you'll love this, is what it says right down here at the bottom. Automating line increases. That's what the FICO algorithm is going to bring to business, just like they did to personal credit. So instead of every 90 days, 6 months, 1 year having to be reviewed again, having our financials submitted back to an underwriter or a process within any lender, they're going to have the ability to automatically increase your business lines of credit. What that means to us is a faster increase in how our lines grow, and it means we don't have to spend a ton of time worrying about the banks and sending them business, right, Scott? We can keep all of our focus on notes, doing exactly what it is we do.
That's really cool.
It's going to be revolutionary. Just so you know, it's a couple months out. It's in the works right now, but it's going to be revolutionary. So business credit, the 5 strategies. What strategies do you need to use to ensure your funding success? Well, strategy number 1 is, it seems like it's the most likely and most obvious of strategies. Determine the level of game that you're going to play. Where do you want to play at? You know, if it's just about having, an extra $500,000 to work with, we can do that on the local level. If it's about the millions or even multi-million-dollar levels, now we need to start talking about regional banks, or we got to go with the tier 1s. The smaller banks, it's going to be almost near impossible to get million and multi-million-dollar lines of credit because they just don't have that capacity when it comes to their asset allocation. If we want to play big, we gotta create that reputation to be able to play big with the big banks, if that makes sense.
Mm-hmm.
The next strategy: create personal profiles that sustain your level of play. So we've talked about this a few times. I've hit on it. Merrill hit on it all last week. It's really the difference between a nest egg profile and a leveraging profile. We can facilitate both. We have some people who just want to have 800 plus credit scores, right? But we also have serious investors who want to be able to leverage their profile to create long-term business assets and capital for sustainability. And so when we go in and we create that nest egg profile, it leads us to a leveraging profile. The nest egg profile, though, that one of the scenarios that we've actually worked with many couples and business partners on is have one person who's committed to going out and just creating business, hammering deal after deal with their personal credit profile. That's that leveraging profile. So they use it. They every 90 days, every 6 months, they're going out for another inquiry. They're going for another funding round. They're getting larger and larger lines of credit, or they're taking down properties, or they're focusing their money on buying multiple notes. Whatever the vehicle is, that profile is getting used and abused. But then their partner has the nest egg profile. So on the off chance that something goes sideways and we have another 2008 meltdown, right? You can have somebody who has the ability to create a soft landing for the partnership so that they can continue to run and sustain business with their good credit, even though the business partner has gotten a little bit beaten up when the economy turns or when something goes bad or a deal doesn't work out the way they expect. But that way, and we have, I can't count the examples. One of them is one of our clients who's been with us the longest. He and his wife did this very strategy, and he went out and did the business. She kept everything at her tier 1 level, and so when business did go sideways a little bit, they just did what they had to do to really kind of fire sell everything that they had going on, and their entire life didn't turn into just complete turmoil and turn upside down because she had the nest egg. Mm-hmm. So she was the umbrella for the soft landing. He was the bulldozer to go out and make deals happen. And it's a brilliant concept that really puts you in a position where you can take advantage of every opportunity and not just an occasional opportunity. So something to consider, something to think about when you're going into business. Is it worth having a nest egg to create a soft landing as you're going out and conducting business? Strategy number 3 we're going to jump into is establish a distinct identity for personal and business. And you want them to be very distinct and separate. You don't want them to be too close. A lot of people get excited about having their names or their initials in their business, but we want to have it be as distinct as possible so there's no possibility for crossover, no possibility for the piercing of the corporate veil, if you will, when it comes to business. And that's a whole another conversation that I'm not going to get into. But one thing I will say, when you're looking at your business names, there are some red flag words that underwriters look at. Any of these words, real estate, property, capital, securities, equities, finance, ventures, any of those words are words that really just cause an immediate knee-jerk red flag reaction from your lender, because lenders don't want to lend money to people who are going to risk their money. That's lending 101. Don't risk our money more than we need to. And you can talk to any underwriter. Underwriters and regulators are there to create a safe environment for lending. Underwriters are there to try to make sure they live up to what the regulators have set. And our job is to figure out how we fit in that mix and really persuade them we're not a high-risk client. Persuade them that lending us their money is a great idea because we'll always pay on time, they'll always get their money back, and there's not an exorbitant amount of risk that they're going to undertake when they do business with us. So if you're sitting on a business right now that holds one of these names, we've got a solution for you. And because I do the business coaching, it is one of the things that I work with on a daily basis, how to work with or work around a business that has any one of these red flag names. So we can help you. We can definitely put you in a position where you have a highly fundable business identity. And it really comes down to these questions here. You know, what type of entity is it you wish to fund? What's your standard industrial classification code, your SIC code? Do you have an SIC code that says you're in finance, or do you have one that's a less risky code that would be something like marketing or consulting? These little things matter when we start talking to the banks. We have to have a fundable business identity, and it starts with the name, and then it comes down to all of these components, like do you have an online presence? I know some of us are probably still in a day and age where we're like, yeah, I don't like social media, I don't want to have anything to do with it, it's a complete waste of time, and it's the evil of the earth, right? But the reality is, this is the day and age where underwriters can sit at their desk and they can jump on Google Earth and search your address and see exactly what type of building you claim you work in.
Yeah.
That's an easy job. They used to have to drive out there and knock on your door. Now they can just see. You know, if you don't have a LinkedIn account, are you really in business? If you don't have a social media page, are you really in business? That's what they'll ask. And so Merrill talked about this last week on the personal side. Talked about the underwriting experience, right? You go into you submit your file, and the underwriter says, I need 20 points. Well, if your business credit score gets you 10, where are the other 10 points going to come from? They're going to come from, are you a brick and mortar business? If I dial 411, do I get your business? Do I get your phone number? Do you have a fax line? Some lenders, folks, just so you know, some lenders require you to have a fax line still. Now, it's not often you run into that, but it happens. And so we have to have this presence that says we are a legitimate business. We have to have that presence, because if we don't, we're never going to meet their underwriting criteria. And even if you have the best credit score in the world with the most highly fundable profile, at the end of the day, if you walk in and they say, no, you really don't seem like a business, you're not going to get funded at the levels you want. You might be able to pull a $5,000, $10,000, $15,000, $20,000 line, but you're not going to get fundable at the level you want if you don't have legitimacy to your business. And once you have that legitimacy, then you jump into the next step, because once we establish our business lines of credit, the next most important thing there is, Scott, is traffic, right? You got to have traffic.
Yeah,
and so
that's totally the big key. You've got, in today's day and age, we're all in the media business of some sort. You've got to go where your clients are, and more clients are online, and more clients on the social media and that stuff. And so if your competition is online, you need to be online of any sort. And even, I agree. When you talk about LinkedIn profiles, if I get an email from somebody, I'm like, who the heck is this person? The first thing I go to is LinkedIn to see if they got a photo that it's somebody I've met, or I know if they're online. If they're not online, I don't take them serious.
Yep, absolutely. And that's why one of my favorite parts of this entire process with you, Scott, is right at the beginning. You say, here's how you can find me. Find me on Twitter. Find me on Google+. You list it out. That's the reality of business today.
Mm-hmm.
You follow the leader. That's the easiest way to be successful. Do what the successful are doing, and you will be successful. So we have to create that type of traffic. We also have to take this concept, and when it comes to our business lines of credit, we have to create fundable traffic strategies in our business lines and our business specifically on the money side. So we have to have vendor trade lines. If you're into any type of rehabbing, flipping houses, any of that type of stuff, or buy and hold, and you're doing any of that, if you're holding properties, vendor trade lines will help create a possibility of monetary traffic that's going to give a look-back history of good payments, responsibility, all of the things, deference, all of the things that an underwriter wants to see, to know that you as a business are a good bet when it comes to them getting their money back when they give it to you. For depth, you go with business trades, business credit cards. We really only want one or two. That's the reality. When we start getting more than one or two, it actually starts becoming a detriment to your business credit profile, just like it does on the personal side. Now, business lines of credit, business loans, these are the golden egg that we're after right now, right? This is where we get to have a business line of credit that we open up and we use it, and we have check access to it, and we run. Now, let me caveat this real quick. We've got to have the right lender also, And we have a whole list of questions that we ask or give to all of our clients to ask lenders, because the last thing you want to do is get a business line of credit someplace where every 90 days they're reevaluating your loan. Or, I mean, worst case scenario, that's worst case. Best case is every year they're reevaluating your loan. We don't want to have to do that if we can avoid it. So you want to make sure you vet your banks, these lenders, in a way that's going to put them in a position to not be causing you to stop your business activities to reconfirm that you're doing your business activities. That it's just a waste of time, and so we want to avoid those things so that we can use these business lines of credit in a way that every 90 days, every 6 months, they're automatically increasing our limits, and then we can grow these to the levels we want. And if it's, you know, 200, 300, 400,000, $500,000, $1 million, there are ways to do it so we don't have to keep revisiting, are you in business? And Scott, you know more than anybody, you've got so many things going on right now that the last thing you need to do is keep going back to the bank and saying, hey, here I am, here's my financials, right?
Yeah.
Just not the best use of your time.
No, that's what it's for. No.
Yeah, right? No doubt. So the next thing we want to do after we create that traffic is create a utilization strategy. And utilization strategies are what I was just talking about, growing your card line limits by creating positive traffic history and never going above that 50% if possible. Grow your cash advance limits. You know, it's one thing to have a business credit card where you can take a cash advance and then end up paying 21%, but it's a completely different scenario when you have a business line of credit that you can take cash advance against and not have those high interest rates tapped onto it. When we're talking business lines of credit, something to keep in mind, we're talking about lines of credit that we're paying 3 to 5, maybe 7% at most on these business lines. Business credit cards usually start at 12.9%, so it's not the cheapest money, and that's another one of the negatives to going out and having a company blast your personal profile all over the world trying to find you business credit cards, that you're going to just get beat up by interest, and a lot of people don't realize the negative impacts that have. Even on cards that have 0% interest for a certain amount of time, a lot of times they're not going to have that when it comes to a cash advance. So you don't have full access to your funds. It's a real dicey game. I don't know many people who have won at that. I'm sure there are some. I just haven't met them yet.
Right.
But it gets real ugly when you start messing with those. So those are your 5 strategies. The key to the business side, as always, is coming into this with a plan that is executable. Like Scott said at the beginning of the call, he loves working with everybody on this call because you guys take action. That's the key to any of this. You have to take the action to get in a position where you can take advantage of every opportunity that's before you. And as we talked about last week, you know, when you come into this investment arena, the goal is to create wealth. And wealth means a lot of different things to a lot of different people. You know, so for some of us, it's just having enough money at the end of the month and not more month at the end of the money. For some of us, it's more about, you know, legacies and you know, creating an opportunity for generations to come. But a simple definition of wealth is when your money makes more than you do. And I know Merrill talked about this last week. The optimized definition of wealth is when other people's money makes more money for you than you do. And that's really the key. And that's the focus of all the investments that we work with. I know it's the focus that Scott works with, to have his money making him money, but other people's money making him more money. And when you can do that, you've really reached an optimized level of wealth. And then it comes down to, what's it worth to you? You know, acquire tens of thousands in credit lines and loans. Create a higher standard of living. You know, it's nice to have a big house. It's nice to live in the big neighborhood, But if you're not enjoying it, what's the point, right? Having a ton of money is fantastic, but it's not the end-all be-all. You got to have the lifestyle to go with it, the quality of life, and that's different for everybody. Now, one of the things that we'll focus on is when we do your credit analysis, we'll help you build a plan, exactly what it's going to take to get you to an 800 fundable profile, because it can't just be about the score. And for those of you who missed why it's not just about the score, Scott will have you the link, and you'll be able to see exactly why that is in Merrill's presentation that he did last week. What I will tell you is this, though. Because you spent the time with us tonight, and some of you spent the time with us last week to come in and learn a little bit about what we do, and there's no way we can teach you everything in an hour. We all know that. But because you've done that, we are willing to commit to you, and we'll commit our team to any one of you to get a free credit analysis that'll just enlighten you and let you know how big the mountain is that you really have to climb. So I know Scott mentioned it. He actually went out and got his FICO report, right, from myfico.com. Order the 3-bureau FICO report. It's the Ultimate 3B. That's going to give you the insight to 19 FICO scores that are being scored or calculated depending on the lender based on your information that's being reported at the credit bureaus. And we'll be able to pull that information and just walk you through step by step and let you know exactly where the weaknesses are in your profile. We're going to do that. We're committed to giving you that free funding analysis. It's a full audit of your identity, full audit of your data for accuracy, a full audit of your revolving accounts to see what your point yield really is. Are you getting the amount of positive points for the accounts that you should, or are you losing points? And we'll also audit your installment and your credit profile for fundability. That's what we'll commit to you. It typically takes about an hour of time, and it'll give you just an eye-opening opportunity to see what your credit really looks like. Even folks, I'll tell you right now, if you've got an 800 credit profile, you still may not be fundable at the level you want to be. And if you've ever gotten turned down, which it happens, and you have an 800 credit score, it's mind-boggling because we've all been taught that this 800 is supposed to be the key, but it's truly the fundability of the profile, and that's what we focus on.
I can really harp on that, though. When I was a banker, we'd have people that came all the time and get credit scores because they'd been cash buyers, but they just had nothing on their records, and well, they paid cash for everything, so great. Then they had 1 or 2, 3 trade lines, but they weren't the right proper ones, and so they would be all pissed off that we wouldn't give them a loan on their car, for a new car, things like that. I'm like, listen, I get why you're upset, sir, but you just don't have any credit lines. You don't have anything that shows as a credit status, and so you're so right on this stuff here, Brad. It's more than just one thing. It's a variety. It's really bringing the different ingredients together to really build a very palatable and tasty credit profile, right?
Absolutely, yeah. That couldn't have said it better. That's exactly what it is. And we see it all, just like you said, you saw it all the time. It happens all the time. And it's one thing to get denied when you got a 520. You kind of expect it, right? But if you've got an 800, people break down and lose their minds over that type of stuff.
Right.
So we'll walk you through it. We'll let you know exactly where you're at and what it will take to get fundable. If you partner with us, we do a full plan design meeting. We do an optimization plan in 30 days based on your participation. We actually give you an implementation task calendar that will walk you step by step exactly through what you need to do to be fundable. We do quarterly updates. We support we support you until all of your scores. All 19 scores of this Ultimate 3B report are 800 plus or 2 years, whichever's longer. So it becomes a long-term partnership with us because we're not going to just leave you on the side of the road at any point. We're going to make sure you get every score up to 800 plus. Mm-hmm. So what does that look like? Well, Merrill mentioned it last week. How you partner with us is very simple. For business credit and optimization plus the personal credit optimization, it's $4,000 plus we do 1% of any of the business lines of credit that we get you. Now, if you're buying houses and other things like that, we're going to coach you through that process anyway. That's all on you. The 1% is purely on the business line of credit side, and it's something that we've started because we have some passion projects of our own that we like to go out and do different philanthropic events and help communities and help society with growing in any charitable way we can. And so that 1% goes towards that. If we're working with a partner or couples, it's the same process, business credit optimization, personal. It's $6,000, so you save a little bit of money on the optimization side, and then 1% of any business lines up to $1 million. And we guarantee that we will work with you, like I said, until we hit that 800 plus on all 19 scores, or 2 years, whichever's longer. And then when it comes to business lines, we're going to support you until you have 3 business lines of credit with at least $100,000, or again 2 years, whichever's longer. Now, if you already have $100,000 in business lines of credit, come and talk to us. We have clients who have come to us with $500,000 in business lines of credit, and we'll work with you just like we do with anybody else to help grow that business line of credit to whatever level it is you're looking to get them to. So that's how it works on the business side. If it was just about personal optimization only and you were looking to build that 800 plus profile, you save a little bit of money, $3,000 for the personal, $5,000 for couples. What we're taking away there is just the $1,000 for the business credit. A little background: 19 plus years in business, an A plus rating. You'll notice I point this out a little bit, not accredited, which means we didn't pay to get an A plus rating. It means that we have 0 complaints in 19 plus years in business. That's pretty amazing, and it's really one of the most astounding accomplishments any business could ever expect to have. So we've got a great record. Fast track your information. If you need to get a hold of any one of us, you can reach us at 438-9090, 801 area code, info@creditsense.com. Here's the link, myfico.com. Go there to get your reports, and then let us know when you have your reports, and we'll set you up with an analysis. One of the things that we're committed to for Scott is having all of our senior analysts available for any of his group first. So you guys get preferential treatment coming in. All you got to let us know is you came from Scott, and we're going to make sure you get one of our top analysts before anybody else who's talking to us, if that works for you guys. That's all I've got for tonight, Scott. It's been an absolute pleasure. I appreciate your giving us the opportunity to have this webinar, and I certainly appreciate all of your feedback and interaction. It's been fantastic.
Hey, glad to have you on here. Remember, guys and gals on here, it's just, as Merrill talked about last time, don't let that price point kind of be shocked. You know, it's spread over 2 years. That he did talk about payment plans, what you can afford, and that they will work with you to get things done. So keep that in mind. It's a great thing for you guys to really be able to tap into this and really help yourself, your spouse, really kind of revamp your credit and help you build some lines of credit for you on your business. So let's see here, get some questions.
Scott, if I could, I appreciate you pointing that out. You mentioned it. We will work with your group to do installment loans if we need to. Last thing Merrill wants is this to not be something that somebody could afford or could take advantage of because they don't think they have the money for it.
Sure. Got a couple questions here for you. Cliff has asked a question. Do they need to see an ex-biz report as well for the business side and done in Bradstreet? No, Cliff. All they need you to do is go to myfico.com and then download your report there for $30 and then send them that report, send them a login so they can pull that information through their software to really help you. And then they'll help you build your business stuff up from that. So they don't need to see your existing stuff. They'll walk you through step by step on it. So all you've got to do to get this taken care of for you, get the free business and credit profile, is go to myfico.com. For $30, download that, and then email that report to info@creditsense.com with your login ID, phone number, and the password so they can pull that for you. Okay? And this is not, we're not talking about going to creditsense.com going to myfico.com. Yes, creditsense.com will not work, everybody. It's got to be myfico.com. You don't want a FICO. Right. You want them to actually pull your FICO. All right? Let's see what other questions you guys have on here. Now's a good time to ask questions while we got the stuff here for you guys. Glad you enjoyed the information. Thanks for all the positive comments, everybody. Brian, what would you say is probably the biggest shocker for most people when they send in their myfico.com report? Is it because based on that they're maybe used to looking at something that's a FICO versus a real FICO, that their scores are higher or lower, or that they're just kind of, if you're looking at stuff that the amount of stuff, or really the amount of shit that's on their credit report really drops their value, numbers down below where it should be?
Yes, and yes. the one of the biggest shockers is if they have been looking at a FICO score, they can't wrap their head around why it's so different. And then the other one, how much shit there is on their reports, as you put it. No. A lot of folks are surprised that their name, all the stuff in their identity, is just destroying their credit score. They don't even. It's not even something that's ever been part of the conversation with anybody until they're talking to us.
Right, exactly. Bill asked the question, what is the login ID that you're referring to? When you go to myfico.com, it's going to ask you to create a login ID for that. That's what we're talking about, Bill. You give them your whatever login ID you're using for myfico.com so they can link that report into their software to help them really be able to review your FICO profile and help you build and tell you, hey, here's how you can optimize your scores. Let's get rid of these 3 addresses. Let's eliminate these people that are showing up under your profile. I mean, I thought Scott Carson was kind of a unique ID, but there's literally, I have met 4 Scott Carsons in the last 12 months here locally. And 2 of them showed up because one lives here in Austin, one lived in similar zip code as I did, and it was kind of affecting my credit score a little bit here. Hang on a second. I've got some questions popping up, which is good. All right. Joe asked a question. If we have several corporations, do we pay extra for each corporation?
Yeah, if we're going to work on multiple business models, it would be $1,000 for each additional business model.
All right. If you're just starting your business, can they still help with the business lines of credit? Daryl asks. Daryl, now you really need to have yes, they can help you get off the right step, but you're not really going to be able to go out and get business lines of credit until you've been in business for 2 years, right, Brad?
Right. We'll be able to take advantage of some smaller business lines like business credit cards to start building the credit, but we're minimum, if you've got a stellar personal credit profile, we're minimum 6 to 9 months to really be able to have a conversation with the lender about a business line of credit, and it'll be a small line. It won't be something where we go out and go for $50,000.
Great. I don't no, Charles, you need to go to myfico.com. That will not work. They can't. You got to realize, guys, myfico.com, it's straight to the FICOs. That's like straight. Okay, it's like going to taking your if you had a Porsche, would you go to just a regular guy in the corner here who didn't have all the tools for your Porsche? No, you want to go to the Porsche dealership to get it taken care of properly with the right tools. That's why they need the FICO.com, a nav account, credit sense report. Any of the other stuffs are not going to work for you. Okay? All right. Let's see here. Can I start up a biz account with Navy Federal and put my property income into it to get started? Yeah, if you want to, Jacob. I guess that's a kind of way to get started, I guess, with a business account. But what I would do is take the time, fill out the report, and give them a phone call because Brad and his whole team of experts can get you off to the right start. And that's a free thing to do, is have them review your profile. You're not going to have to pay the $4,000 or $6,000. That's literally the first thing to help you kind of square one, is figure out where the heck you are today so you can be in a better place tomorrow. Okay? Let's see your question here. Brad talked about setting up a proper credit profile earlier and leveraging profiles. A credit profile number also assigned to clients. Brad, you want to answer that one?
Say that one again.
You talked about setting up proper credit profile and leveraging profile. Is a credit profile number also assigned to clients? I think he's kind of, yeah, I think you're not sure the question what you're asking.
Yeah, a credit profile number is not something that is something. It's not something that is ever assigned to a client.
Yeah, exactly. Let's see here. Charles, okay, so I went to my FICO today, $30 per month. Do I cancel after getting the report with you guys? Did I just do it for a month there, Brad?
Yeah, you know what? After the analysis, you are free to cancel if you like. A lot of you will keep it because you want to engage it with us, and then it makes sense to keep it so that we have the quarterly reports coming out. But yeah, after the analysis, you can cancel that if you want to.
Right. Jeff asked a question. I understand that this is a bit different than a credit repair service, but does CreditSense.com also do the credit repair along with credit education?
So the answer to that is we do credit improvement, which is 100 times better, a million times better than credit repair.
Right.
Our accuracy department is they're outstanding. I don't want to toot their horn too loud, but credit repair, you're going to get maybe 24% out of the best company in the nation as far as results. We're going to get you 35-40%.
Yeah.
So we take credit repair as a component of optimization and address it. The beauty of it is, though, with the other parts of optimization, even if something doesn't come off, because nobody can guarantee it's going to come off.
Yeah.
If something doesn't come off that's a negative, we're going to build your score positively around it so that it minimizes that negative impact. So, yes, we will address it, but we're not dependent upon it.
Yeah, I mean, that's Jeff, you got to realize anybody can literally, I didn't pay a credit repair company. One of the things I did after going through a divorce and almost filing bankruptcy back years ago, I literally pulled my credit report, my numbers, and literally, if you go online, you can download the letters, the templates you need to use to send that stuff out, and I just process stuff to happen all the time, and he'll get that thing. It got stuff kicked off of my report that fell off and just finally got paid off, things like that. But CreditSense is going to be doing credit repair for you. They're going to help you with your credit optimization. Two different things, totally different for you. All right, so let's see. Charles, yeah, you should cancel your nav and go with your myfico.com. Clem has a question. You're showing creditreport.com on this screen? No, I don't think we are.
So, yeah, it's on the screen, Scott.
Okay.
That, guys, is not the best report. But what will happen on occasion, if you have any identity conflicts in your reports as FICO pulls it down, myfico.com is very, very precise in how they are willing to report. And so if there's any identity conflicts, they will block, usually Equifax is who it turns out to be, but they will block the bureau report from being downloaded.
Mm-hmm.
CreditReport.com is a little more liberal and a little more lenient. They'll let that report, they'll still let your information come through, but it's not as detailed or as thorough a report. So it's kind of our fallback on the off chance that you can't get the MyFICO. It's only one score. It's not 19 scores. And so worst case, if you can't, get the myfico.com. If that doesn't work, try creditreport.com.
Okay, good question, though. Will FICO.com cover both personal and business on one account?
Nope.
Yeah. It's because you're using different tax IDs, Charles.
Yeah, MyFICO's just personal right now.
Yeah, just personal. Cool. What other questions you guys have before we let Brad go on this Monday night? Whoa, big question popped up here. Okay. Let's see here. All right, Christina, let's just talk offline. Your questions, you got confused, darling. We're talking about building your business, your personal profile, okay? If you haven't been in business for 2 years, they will help you put things in place so that when you hit that 2-year mark in your business, you've done the right things. Remember, we talked about the 5 things that you can do to help boost your business profile up to the point where it's available, okay?
Yeah, if I can add to that, if you haven't been in business for 2 years, if you have, like I mentioned, that stellar personal credit profile, we can help you get funded in under 2 years. It's going to be a process that the better your personal profile is, the quicker we can get you business funding.
Yeah. Felipe, retype your question in, bud, because you asked it so long ago, I think I accidentally clicked through it. So, Felipe, I must have missed your question early on. Got one more question here with Felipe, and then we will wrap it up for the evening. Actually, Felipe asked a question. Are you talking about when you don't want to go above 50% in your credit lines? That means both for your credit cards, as far as what you have on your credit cards and on your lines of credit. You want to stay below that 50% mark, Brad? Is that correct?
Yes, that is correct. As long as we're going to be in a position where we're using our credit to actually go out and try to gain more credit, we want to make sure that underwriter has a look-back period that shows a pattern and a history of staying below 50% utilization.
Okay, cool. Question here. Last question of the night. Bill asked, does the structure of the business entity affect the credit building process?
The structure of the entity, depending on what you're referring to, LLC, S corp.
Yeah, that's what he's asking about. It doesn't make a rat's ass difference if it's LLC or S corp, correct?
Correct. That's not going to make a difference at all.
Yeah, like he said earlier on there, Bill. He talked about having the SIC, also having the proper SIC score and how your company is titled. Those things have a much bigger difference on it. It doesn't matter as long as it's an LLC or S corp and not a DBA, like Bill Burke doing business as inverse investments. You know what I mean? So.
Yeah, DBAs are not fundable entities. It's the entity that they are doing business under that is fundable.
Right. Cool. Question here. Last question is: how important is it to have a high paydex score?
In this day and age, it's still important, just because until the FICO small business scoring model comes on in full force, Dun & Bradstreet is still kind of the gold standard. But it's not. The challenge is that it's not terribly dependable, right, Scott? And so less and less vendors are reporting to it, and so it's slowly becoming obsolete. But it still matters right now.
Cool. All right, Brad. Well, hey, thank you for taking time in your busy schedule. Tell Merrill thank you as well.
I'm right here, Scott. Oh. Haven't missed a thing. I just wanted you guys to get it, like I said, from the man who's actually going to serve your needs and coach you all the way to that $100,000 aggregate in lines of credit. Like we said, we started out small. This is permanent and positive. This is not a run on money, guys. This is permanent and positive change for your business profiles so that you can create something, because whether you do anything or not, the next 6 months, the next year, the next 2 years are going by. The question is how much horsepower will you have in funding by the time that 12 or 24 months passes? If we get started now, we have a chance at creating long-term checkbook access to funds that they will without further income verification continue to raise the credit limits, just like Brad said, and we know that process inside and out. I've been doing this for 20 years, and things have not changed when it comes to what is sexy to an underwriter. So thank you again, guys, for attending. And Scott, you're a superhero as a host, and thank you for engaging us this way so that we can educate your team.
Hey, anytime. Thank you, guys. Long overdue. Would you not agree, Merrill? Long overdue.
Long overdue, right? So I can't wait to see you at the next event, and whatever city we're in, make sure you stop by the Credit Sense booth where we are going to be for the Real Estate Investment Expos and the different events, because we would love to meet you guys in person.
Yeah, you guys going to be out in Long Beach here for the
yep.
It's no longer called the REI Expo, but it's what?
Yeah, Think Realty.
Yeah, Think Realty Expo. Yeah, I'll see you there, buddy.
All right, that'll be awesome. All right, have a wonderful evening, and again, thank you, Scott.
Hey, thanks, guys. Thanks, Brad.
Bye now.
Bye. All right, everybody, we'll have that replay out to you guys here before we'll have it out to you first thing in the morning, along with a link to last week's call that Merrill did as well, to give you a little bit more of a background for those that are joining us. But otherwise, have a great evening, great week. Don't work too hard, and we'll see you guys at the top. Take care, everybody. Bye.